If you're near retirement and you own a home or you dream of owning one in retirement, property tax can make or break your budget. I've seen people in their 60s and 70s paying $3,000, $6,000, even $10,000 a year in property taxes alone. That's money going out every single year, whether your income goes up, down, or stops. Right now, there are headlines flying around saying that 8 states are eliminating property taxes or moving in that direction, especially on primary homes and for seniors. Is your state one of them? If you happen to retire in the wrong place, you could easily spend hundreds of thousands of dollars over the rest of your life just on property tax, money that could have stayed in your pocket or gone to your kids and grandkids. In this video, we're going to look at what's really happening, which states are involved, what eliminating property tax actually means, and whether you should think about moving or be very careful about the fine print. We'll also talk about what to do even if your state is not on any of these lists. If I could help you understand whether your state is giving retirees a break or quietly squeezing them harder, would you stay with me for the next 25 minutes? By the end, you'll know how to check if your state is in this conversation, what questions to ask, and what steps to take this year, not someday. Welcome back to George Edward Explains. Today we're looking at something that can completely change what retirement feels like for homeowners, property taxes, and a group of states that are either offering or talking about huge breaks that for some people can effectively wipe out the tax on their primary home. If you're anywhere near retirement age, grab a notepad, make sure you're subscribed, and let's get right into it. Let's start with the big picture. Why is property tax such a huge deal for retirees and people over 50? When you're working, you have a paycheck. Taxes come out, but you have regular income coming in the door. In retirement, your income often flattens or even drops. Maybe you have Social Security, maybe a pension, maybe withdrawals from investments. But for most people, that income is not growing as fast as it did when they were in their peak earning years. Property taxes, on the other hand, don't care if you're retired. They don't care that your back hurts or that your hours got cut. They're based on the value of your home and the tax rates in your area. If your city decides your house is worth more this year, your tax bill might jump, even if your income didn't budge. Imagine a retired couple paying $4,000 a year in property taxes. That's about $333 a month. Many pay much more, $6,000 a year, $8,000 a year. Over 20 years of retirement, $4,000 a year is $80,000. At $8,000 a year, that's $160,000, and that's without counting increases. For many older homeowners, property tax is their single biggest bill after health care. I've watched neighbors over the years who ended up house rich and cash poor. They bought their home decades ago when prices were low. Now the neighborhood is desirable, values have shot up, and so have the taxes. On paper, they're sitting on a home worth $500,000 or $800,000, but they're living on Social Security and a small pension. The property tax burden starts to squeeze. I remember one older couple on my block years ago. Lovely people. They'd raised their kids in that house, planted the trees in the yard. Every year, the property tax bill went up a bit. They grumbled but paid it. Then one year, the city did a big reassessment. Their property value jumped, and so did their tax bill. The next spring, there was a for sale sign on their lawn. They didn't want to move. They had to. That's the emotional side we don't always talk about. Leaving a family home, not because you want to downsize, but because you're pushed out by taxes, is painful. It's not just numbers, it's memories and identity. So let me ask you, how much did you pay in property tax last year? Did it feel reasonable, or did you swallow hard when you saw that bill? If you multiplied that number by the next 10 or 20 years, how does that feel? Now imagine what else you could do with that money over the next 10, 20 years if your property tax was cut in half, or in some cases, for some people, brought very close to zero. More travel, better health care, helping your kids, just breathing easier. There's a line of wisdom I like. It's not what happens that determines your future. It's what you do about what happens. We cannot control the fact that taxes exist, but we can control how we respond, where we live, what exemptions we claim, how informed we are. That's what this video is about. Before we talk about specific states, let's get very clear on how property tax works and why some states and voters even talk about eliminating it. In simple terms, property tax is based on two main things: the value the government says your property is worth, and the tax rate they apply to that value. The local assessor or county sets an assessed value for your home. Then different pieces of government, your city, your county, your school district, each apply their rate. Add them up, and that's your bill. Your local government relies on this money for a lot: schools, police and fire departments, road repairs, parks, libraries, local services. That's why property tax is so stubborn. It's the backbone of local funding in much of the country. If a state says, we're going to eliminate property tax, they're also saying we have to replace billions of dollars of school and local funding somehow. So why are we hearing so much about elimination or big reductions now? One reason is that property values have jumped in many areas, especially after the pandemic housing boom. When values jump, assessed values follow, and tax bills can climb faster than people's incomes. Retirees on fixed incomes feel this the most. Voters get angry. Politicians notice. Another reason is competition. States want retirees with money to move in. Retirees bring spending, volunteer hours, and often lower demand on schools. Offering big property tax breaks, especially for seniors, can be a way to say, come here, retire here, we're friendly. Some states and politicians have floated the idea of eliminating property tax on primary homes, sometimes just for seniors, sometimes in broader ways, and replacing that revenue with higher sales tax or broader consumption taxes or different kinds of state-level fees. Here's the key thing. Eliminating property tax almost never means that the state suddenly stops taxing all property forever. Usually it means one of three things. First, elimination or big exemptions on primary residences only, not rentals, not businesses, not second homes. Second, elimination or major breaks only for certain groups like homeowners over 65, disabled veterans, or people below certain income levels. Third, very gradual phase-outs or caps, where your bill is frozen or growing slowly, not going to zero overnight. And very often what you see in a headline, State X eliminates property tax, is actually a proposal, a bill under debate, or a partial program with a lot of conditions. That's why you must check the details. Let me ask you something. Would you trade higher sales taxes on everything you buy for the rest of your life in exchange for no property tax on your home? For some of you, that might be a great deal. For others, especially if you spend a lot, maybe not. If your state said, no more property tax on your house, but we'll tax other things more instead, would that be a win for you personally? I always remind myself, when you hear big, exciting headlines, time and patience are your friends, and impulse is your enemy. Take the time to understand what's really being offered before you uproot your life. Now let's talk about those 8 states and what's actually going on. First, a big honest statement. As of the most recent information I've seen, there is no U.S. state that has completely eliminated all property taxes for everyone, on every kind of property, forever. Property taxes are still very much alive. What we do have is a group of states that offer extremely generous property tax exemptions to seniors or disabled homeowners, in some cases eliminating the bill on many modest primary homes, or are actively debating or structuring major changes that could dramatically reduce property taxes on primary residences. We're going to look at 8 of these states that are often mentioned in no property tax conversations. In each one, I'll tell you what's actually happening for homeowners, especially older ones, and what to watch out for. But remember, laws change. Counties and cities within a state can have different rules. Always confirm with your local tax office or a qualified professional. State number 1, Alaska. Alaska has one of the most generous senior property exemptions in the country. If you're age 65 or older, or a disabled veteran, and you own and live in your home as your primary residence, the law allows a big chunk of your home's value to be exempt from property tax. In many places, the first large portion of your home's assessed value can be completely shielded from tax. If your home is modestly priced, that can mean your property tax bill on your primary home drops to zero. But there are trade-offs. Alaska has a higher cost of living in many areas, challenging winters, and your distance from family and healthcare may be an issue, and not every local government handles the exemption the same way. So if you already live there, your action step is to make absolutely sure you're claiming every exemption you're entitled to. If you're thinking of moving there just for taxes, slow down and look at the full picture. State number 2, Florida. Florida is famous for being retiree-friendly on taxes overall. No state income tax, homestead exemptions, and limits on how fast your assessed value can grow on your primary home. For homeowners who are 65 or older and meet certain income limits, many counties offer an additional senior exemption on top of the basic homestead exemption. In some cases, that combination can significantly reduce and occasionally virtually eliminate the property tax bill on a lower value primary home. But Florida has not abolished property tax. Local governments still rely on it, and taxes on higher value homes can still be substantial. Insurance costs, especially property insurance, can also be very high. So if you already live there, your job is to make sure your homestead and senior exemptions are in place. If you're thinking of moving there only because you heard no property tax, understand that for most people it means reduced and limited, not zero forever. State number 3, Texas. Texas has been at the center of big property tax debates. The state has no income tax and relies heavily on property taxes, especially for schools. In recent years, there have been significant moves to increase homestead exemptions and compress school tax rates, and there's been loud talk about further cuts. For homeowners 65 and older, Texas offers additional homestead exemptions and, in many cases, a tax ceiling on certain parts of the school tax. That means your school property tax on your primary residence may stop going up past a certain point. For some lower value homes, these exemptions can drastically reduce the bill, and there are deferral options that allow seniors to postpone payments with interest until the home is sold. But again, this is not outright elimination for everyone, and replacing property tax in Texas would almost certainly mean other taxes or fees going up. If you live in Texas now, your job is to understand your local exemptions and ceilings. If you're tempted to move there on the promise of no property tax, make sure you're reading the actual programs, not just listening to politicians in an election year. State number 4, South Carolina. South Carolina offers a significant break for homeowners age 65 and older on their primary residence. A portion of the fair market value of your home can be exempt from property taxes. For many modest homes, that can feel like a big chunk of the tax disappearing. Combined with relatively low property tax rates compared to some northern states, the practical impact for some seniors is a very small property tax bill. But there are still other components and fees, and the exact savings depend heavily on the value of your home and your county. It's not a blanket wipeout for everyone. If you're already there, it's worth confirming with your county assessor exactly what senior exemptions you qualify for. State number 5, Mississippi. Mississippi has a strong homestead exemption for homeowners 65 and older, and for the disabled. A certain amount of the assessed value of your primary home can be completely exempt from property taxes. Because of how assessments work there, for lower-priced homes, this can sometimes eliminate the entire property tax bill on the primary residence. That sounds great, and for some people it is. But Mississippi also has lower average incomes, and the quality of services and healthcare access can vary widely by area. Lower property taxes might come with trade-offs in other parts of life. So again, this is not a magic no-tax state for everyone, but it's one where seniors with modest homes can see very big relief. State number 6, Alabama. In Alabama, homeowners 65 and older, especially those with lower incomes, can qualify for significant property tax exemptions on their primary residence. Depending on income and other factors, older homeowners may be exempt from state property taxes on their home, and in some cases see big reductions on local portions as well. For some households, that can mean close to zero property tax on their main home. However, rules are layered: state, county, city, school. You have to apply correctly, meet income guidelines, and understand that future legislatures could change thresholds. If you live there, the worst thing you can do is assume the break is automatic. Make sure you filed the right paperwork. State number 7, Georgia. Georgia doesn't eliminate property tax, but many counties offer large property tax exemptions for seniors, especially on the school portion of the bill. Since school taxes are often the biggest piece, a generous senior school tax exemption can dramatically cut a retiree's property tax bill. For some seniors with modest homes, this can feel like a near elimination of property tax, especially if county and city rates are relatively low. But it varies enormously by county. One part of Georgia might be very friendly. Another might offer much less. So anyone considering Georgia for retirement needs to look at the specific county rules, not just the state name. State number 8, New Hampshire, as one example of a northern state with strong elderly exemptions. New Hampshire has no state income tax on wages and no general sales tax, but it does have relatively high property taxes overall. However, many towns offer elderly exemptions that reduce the taxable value of a senior's primary residence based on age and income. For lower-income seniors with modest homes, these exemptions can reduce the property tax bill very significantly and, in some cases, effectively eliminate it. The catch? Amounts and rules are set at the town level. In one town, the exemption might be generous, in another, modest. New Hampshire is a good example of why you must look past any headline that says, "This state has no property tax for seniors," and dig into your specific town's rules. Now, these 8 states are not the only ones with big property tax breaks for older homeowners. Many states, like New York, for example, have programs that reduce or freeze property taxes for seniors, veterans, or disabled homeowners. And in parallel, there are always states floating new proposals to phase out or dramatically cut property taxes and replace them with other taxes. Here's what worries me. I see people selling everything, moving across the country based on a Facebook post or a single article that says, "State X has no property tax." Then when they arrive, they find out it was only for people above age 70, or only for very low incomes, or only part of the tax bill, or the law was just a proposal that never passed. I have a simple line that I lean on. Risk comes from not knowing what you're doing. Before you move to one of these states, or any state, based on property tax headlines, make very sure you know exactly what you're doing. Know what's law versus what's just talk. Know who qualifies and who doesn't. Know whether it's permanent or could easily be changed. So, should you move to one of these states? What are the hidden trade-offs? Lower or eliminated property taxes on your home can sound like a dream, but your total retirement life is about more than one bill. First, overall cost of living. Maybe you save $3,000 a year on property tax in State B compared to State A. But if your groceries, utilities, insurance, and housing itself cost much more, you might not be ahead. I've seen people move to a tax-friendly area only to find out their everyday expenses went up. Second, other taxes. Some places with lower property taxes have higher sales tax, higher income tax, or special taxes on things like pensions or Social Security. If you cut your property tax by $4,000, but you spend an extra $5,000 a year on higher sales tax and fees because everything you buy is taxed more, did you really win? Third, healthcare and services. As we get older, access to good doctors, hospitals, and specialists becomes a major factor. If your new low-tax town is far from quality medical care, or if local services are underfunded because of low property tax, that trade-off can become painful. Fourth, family and community. Numbers matter, but so does your heart. I've met people who move several states away to save money, only to find that being far from children and grandchildren hurt more than any tax bill ever did. They either spend a fortune flying back and forth, or they sit alone wishing they were closer. I've also seen folks glow with happiness who moved closer to family, even if their tax bill was higher, because their quality of life shot up. There's another kind of story, too. A friend of mine once thought seriously about moving south because property taxes and winters were both getting harder to handle. He ran the numbers and realized he might save $2,000, $3,000 a year in taxes. Not nothing. But he also realized he'd spend more flying back to see his grandkids, and he loved his local community. In the end, he decided to stay, but he refinanced, claimed every exemption he could, and made a plan to pay off his mortgage faster. He improved his situation without uprooting his life. Ask yourself honestly, is your goal purely to pay less tax or to have a better total retirement life? Sometimes those line up, sometimes they don't. I've learned over the years that the biggest gains in retirement often don't come from quick, dramatic moves, like jumping states because of a headline. They come from patiently planning all the pieces: housing, taxes, healthcare, family, and your own happiness. Sometimes the smartest move is to stay where you are and optimize. Sometimes the best move is to relocate, but for reasons beyond just, they have a big exemption. So what should you actually do, whether your state showed up in those 8 or not? If your state was on that list, or you've seen it in articles about property tax elimination, here are 3 action steps. Action 1, verify the details directly. Don't rely on me, on an article, or on your neighbor. Go to your state's official website or your county tax assessor's site. Look up property tax exemption or senior property tax relief and read the actual criteria. Call their office and ask, what property tax exemptions are available for someone my age with my income on my primary home? How do I apply? Action 2, run your own numbers. Take your current annual property tax bill and multiply it by how many years you realistically expect to own your home, maybe 15, 20, 25 years. Then see what the exemption or new law might do. Does it cut your bill by 20%, 50%? More? What does that add up to over time? Don't just say, sounds nice. Put dollar signs on it. Action 3, talk to a tax professional or financial planner. Ask, if my property taxes are going to be much lower or higher, how does that affect my overall retirement plan? Does it change how much I should withdraw from my accounts, where I should live, or whether it makes sense to move? Let them see the big picture: income, savings, taxes, housing, and family. If your state is not on any of these lists, if you live somewhere with no big talk about eliminating property tax, don't assume there's nothing you can do. Action 1, check existing local exemptions. Many states and counties offer property tax breaks, caps, or freezes for seniors, disabled homeowners, or veterans. They just don't market them very loudly. Search senior property tax exemption plus your state or county name. Call your local assessor's office and ask what relief programs exist. You might be surprised. Action 2, consider your overall tax mix. Maybe your state has higher property taxes but lower income taxes, or it doesn't tax Social Security, or it's friendlier to retirees in other ways. Property tax is one piece of the puzzle, not the whole picture. Action 3, plan. Don't panic. You don't have to move to be smart with taxes. You can plan how you pay off your mortgage, whether you downsize locally, how you time your retirement account withdrawals, and which exemptions you claim right where you are. A thoughtful plan in a so-so tax state is often better than no plan in a perfect tax state that doesn't really exist. Let me ask you, have you actually applied for every property tax break you qualify for? Do you know if your state or county offers a freeze on assessments at a certain age or income? Many people leave money on the table simply because no one told them a form existed. I've come to believe that the greatest enemy of a good plan is the dream of a perfect plan. There is no perfect tax state. There is only a better thought-out plan for you, your family, and your life. Let's wrap this up. Property tax is one of the biggest, most invisible retirement expenses for homeowners. It can quietly drain tens or hundreds of thousands of dollars over your lifetime. Some states are making bold moves, creating big exemptions, especially for seniors, and debating changes that for some homeowners can feel like property tax is being eliminated on their primary residence. But headlines can be misleading. The 8 states we talked about today all have important details. Some help only seniors, some only low-income homeowners, some only cover part of the tax bill, and many programs vary by county or town. And no matter where you go, if you ignore the overall cost of living, healthcare, and your relationships, a tax win on paper can become a life loss in reality. Use this information as a starting point. Check your local rules. Talk with professionals who are on your side. Think about your whole life, your money, your health, your family, not just one bill. Then make calm, informed choices. 10 years from now, do you want to look back and say, I just let taxes happen to me, or I took the time to understand my options and make a smart choice for my retirement? In the comments, tell me, would you ever move to another state just for lower property taxes? Where are you watching from? I read those comments and they help me know what to dig into next for you. If this helped you, please hit the like button so more people over 50 can see it. Share it with a friend who grumbles about their property tax every year. And if you haven't yet, subscribe to George Edward Explains and tap the notification bell so we can keep walking through these decisions together. You don't have to get everything perfect in retirement. You just have to get a few big things roughly right and avoid the worst mistakes. Understanding your property taxes and where you live is one of those few big things that can make a huge difference. Thanks for spending this time with me. Now go check your last tax bill, look up your local exemptions, and take one small step toward a smarter, calmer retirement.